Why do startups fail? Let's take a look now at some key management issues. In the previous video in this series, we've looked at 4 operational issues which can result in failure. And in this video, we're going to look at 4 management related issues. These are lose focus, disharmony, didn't use network, and burnout. And you can see these are all very personal to the founding team. Starting with lose focus. As the startup matures, the founding team have to deal with a range of different challenges, managing investors, dealing with employees and customers, answering to the board of investors, including you. Now, this might dilute their attention or, in the worst case, have a negative impact on the product and the customer experience. The problem here is the guys are really excited about creating their product, but they're not really that excited about running a business, or they're not that excited about the domain and the space they're operating in, and their attention starts to drift off. Now, as an investor, you have a responsibility and the opportunity to act as a mentor and a guide to stop this becoming a problem. And it might mean that you've got to bring in a professional guy to come in and do the business management, leaving the founding team to get on with creating the products and services. When you find people are losing focus, you need to bring them back to get their focus. And the focus needs simply to be on customers and the product, which means you can stop having endless coffees with people who want to just pick your brains or have a nice chat. You can stop using networking as an excuse to not deal with issues. You can stop recruiting advisors. You can stop going into partnerships that don't have very clear financial returns in the short term. You can stop a whole load of PR, because without a product and service, that's a complete waste of time. You can stop putting out masses of stuff on social media till you've got your product right. And frankly, you can stop going to conferences, however fun they are, and I know I've been to a lot of them. So these are some of the warning signs, and really all you want to do is drag them back to get them to focus on the product and the customer. Now, disharmony can be amongst the team, and it can be between the team and investors. And this is a very difficult issue because the team might not be functioning properly, or the investors might come in and the team may resent the interference of investors in the business. Now, if you spot this happening, you've got to get in and either resolve it by restructuring the team, or you don't invest. When the disharmony occurs with an investor, and this could be a Series A investor after the original round, it can mean curtains. So if the investor makes the decision to withdraw, leaving the company with no funding, it will have to close. So be on your guard for any warning signs and do your best to address problems before they become critical issues. Didn't use network. Well, if you're an angel investor or a VC, you can actively intervene to prevent this, because you'll have a great network which you should be using to help your investee companies. Now, startup teams can't do everything themselves. So look at the composition of any advisory board and ask, are there gaps, or is there anything there you can do to improve it? And of course, one of the basic questions is there an advisory board there at all? So think about how your network and how their network can be put in gear to really help the startup accelerate its growth. And this is something you can bring a very constructive external perspective to. Burnout is a real issue, because overwork is a culture in a startup. Again, you've just got to watch the social media film, the Social Network, where they're coding all night, and it can become a real problem. And in fact, in these cultures of these startups, work-life balance is seen as a weakness. And having worked in a US-run investment bank, I really understand the work ethic that they have, but it can go too far. So having a balanced team who can share the burden is absolutely essential, and the ability to delegate is non-negotiable, and you really need to make sure this is happening. Angel investors or VCs need to be alert to the signs that this might be happening and be prepared to step in and address the issue before it becomes a critical problem. So those are some of the key management issues. In the next video, we're going to take a look at the final category of problems, critical issues, which are all around finance. So how do startups fail? Why do startups fail? Here are some key management issues you need to be aware of and alert to, because as an external investor, you can step in to do something about it. And as a founder, if you see it happening around you, you do still have the ability to deal with the issues before they become fatal.